Hey everyone, how's it going? Happy Monday. Yay, Monday. The best the best day of the trading week. I hope everyone is as excited as I am. This is okay, I don't think I actually spent $33 on commissions. I'm pretty sure it was 20 something, 25. I don't know why commissions come in the way they do. Honestly, I might have spent $30 on commissions, but there's no way, right? I didn't trade that many shares. Anyways, $120 on the day net is what's showing right now. By the way, this number will change like other numbers have been changing. If you ever see that a number changes when you're going like video to video, it's because DAS BrokerSync imports the trades, and a lot of the time they don't, or sorry, there's like other fees involved and also some rebates. So sometimes it'll go up a little bit, down a little. I never really know, but for some reason, when you just do a normal export from DAS, and that's the software I use, DAS Trader, it doesn't include everything that comes with the trade. So, anyways, I traded pre-market today. It was the only time I could trade, and I'm realizing I'm kind of noticing a pattern in my entries, and I'm gonna try and capitalize off that. So they were a little bit rushed as I was reviewing before this video. So WLDS, just to start off, netted $97. Could have held. In fact, what I'll do is I'll actually assign mistakes to these. So we're gonna go to the trade view actually, and I'll go ahead and assign mistakes. I've been trying to do that so that I could group by what happened. So the mistake here was I sold early, and also was an impatient, or I guess, um, no, I think it's pretty much just sold early. Impatient ad is a much bigger mistake than I think the mistake I did make on WLDS. Oops, just remove that real quick. But I could have been a little more patient on my entry. Um, Given that this wicked at 2.13, I could have waited for that instead of entering at 208. To be completely honest, I wasn't looking at level 2 when I made my entry in time and sales. I was just looking at the chart. So I was antsy on this and got in early. But if I had gotten in around 212, 214, which is honestly the resistance was showing at 22. But 214 is kind of a better entry, because what happened was it flushed through the twos. Like it went from 2 to immediately like 214 and started showing it some resistance. Then it popped up to 222 and started showing that resistance right here, and then sold off and never really came back. But the other mistake was, well, I guess the only mistake was I sold early, but yeah, I could have been a little more patient on this, but not a big deal. It was a winning trade anyway. At that point, it's kind of marginal. EQ, I added twice. So this is what I'm noticing a lot of time is I'm having to add twice. Pretty bullish price action, as you can see. I mean, this is what I'm seeing when I enter. So we have this big wick. I'm looking to get close to that. It comes down, but it doesn't sell off. So next candle we go higher. I add into this wick as well, and then sell into these downturns. If I had held, I would have hit my profit target, I believe. But again, I didn't sell. I didn't get out of my position because I believe it was at 9.8, and it jumped up and then came back like right back down and never tested that again after this candle. So I was just holding on to this, and then as it was coming down, I was seeing where support was forming. I was looking at the breakout to kind of cover because of the bullish price action I was seeing. Everything was getting bought up here. So when that happens, I tend to want to get out early because you never really know. Whether this breaks up or breaks down, you don't know. It broke down and then came back up. So this sideways kind of action, like here, is very clear, like manipulation, because there's not like volatility really. What's happening is The bid is basically absorbing all of the sell orders above, I would say like underneath zero point 0.9, and then slowly accumulating. And then once there's no sellers left, it explodes. Then the same cycle kind of happens. And it goes until we become more sell heavy than buy heavy. So once all the buyers are basically out of their positions and everything is in the hands of the sellers, that's when we have like cracks down like this. Then down here, you've got dip buyers. So that holds and then it comes up. Same kind of cycle kind of happens. So something to consider, especially with low float stocks, is how long you are spending in a price level. Because if you're short or long, you kind of want, I mean, if you're long, it's better for you if it's just sideways chop. You just have to be careful for situations like this where you could get taken out, or this, where there's big red candles. And this is why I actually switched from a long strategy to a short strategy, is because I would always take really big losses on candles like these. But being in this kind of trade where it's low float, there's good news, there's like a catalyst, and we're not selling off. It's always like a good place to be long, and just holding, waiting for cracks. And what I mean by cracks is basically a candle close that's below a candle. Basically this setup is a reversal setup where you have a green candle where you have a green candle and then a red candle where the close is within the body. But once we have a close underneath the open of the green candle, then that's a pretty good sign of reversal. Obviously you could play wicks as well. We have a wick here, we have a wicks here. So playing, these zones like above 119 can be shorted, for example. But on the other side too, like anywhere where we're not breaking below a level, like we see these wicks here below 9.5, below 9.5 can be bought up pretty comfortably with a relatively tight stop. So that's kind of how you could look at a chart, I would say, for the most part, and how you can pick and choose your entries. This is obviously the 1 minute. So 3 minute paints a different story. So you could see like this is like an area where longs are accumulating. Same thing with here. But yeah, like anywhere where you've got like wicks are areas of interest. So anyways, that's basically what I was looking for here. Is I saw this wick, tapped into it, saw the same thing happen, tapped into that again, and covered into the down wicks. But it was looking pretty bullish. Long explanation for one trade, but we'll move on. So then BJDX was my loss, but it didn't need to be. I sold early. It's that simple. I could have been a little more patient on the entry at 203 instead of when I got in at 19. So a 203 entry and then adding higher at this 224-ish would have played out really nicely. And this one was super volatile today. Like this is like the perfect kind of price action where you have huge like momentum swings up and down and up and down. If you were long or short on this, you probably made money today. Like, and these are the best opportunities. See like here, big down candle as it climbed up again. Like this is what I want to be trading in all day, but you never know what's going to happen when you enter your trade. So yeah, got out early of this one, entered early as well. So it's a bit unfortunate, but we move on. So that's it for today's recap. Just a short one. Okay. So the adjustment I'm going to make is anytime I trade pre-market, which will probably be on Mondays, I am not going to enter on my first entry. I'm going to enter where my second entry would be. So I'm going to take a mental note of where I would enter as a first entry and try and enter above that, whether it's 1 ATR, half an ATR, whatever it may be. I'm just going to do that because that adjustment I think will save me from being in any drawdowns and having to scale in quickly. Just because I've been noticing it pre-market. I feel like regular market hours, it's not really happening as much. But yeah, so I'm gonna make that adjustment, see how it goes for me. Instead of playing as we approach resistance, play above resistance, and I think I'll be in good shape. So yeah, thanks for watching. Hope you all enjoyed. Oh, I will go over the latest comment I got on my video as well. So we'll just go ahead and pop that up. So it was from Mr. Sanjeev here. How do you really trade? Like, what's your strategy? If you go to my channel, and sorry, this is small. I just like brought a new monitor over. So I'm sorry if it's like super small. If you're like watching on a phone or something. But I have some tutorials here. This is kind of basically how I trade penny stocks. Outlines my strategy a little bit. I'll probably delete this and make a new one that's better, because I feel like 5 months ago versus now, I've learned a lot. Although a lot of it applies, I've definitely learned a lot. Then this is how I find penny stocks to trade. Like, these are my scanner settings. And then this is how I use level 2 and read the tape to make trades. There are also some live trading videos that I have. There's one in this. There's like a portion in this where it's a live trade. There's this one as well. I don't know if I have any other ones up as of recently. I don't. Okay, maybe tomorrow I'll record one. I probably won't talk during it because I'll be pretty locked into trading, but those are good videos to watch if you're interested on how I trade, what I'm looking for. I'm not going to be giving my strategy 100% to anyone because I feel like, one, it's useless. If you tell someone exactly how to trade, whether or not they can execute is completely different. Every strategy has to be tailored to that specific person, I would say. And yeah, like the psychology aspect is very much like how I trade works for me and my risk tolerance and I think how I am as a person. I feel like trading really exposes how you are personality wise, because like I learned that I'm very impatient, but my strategy is geared towards, I think, people that are impatient more or less. Even though I'm getting in too early, the way I scale into trades is slow. So I don't rush my second, third entries. And that makes it so that I could build a position and scale out of it over time, as long as I stick to it, right? Obviously, I have other factors, work, and I'll close my trades early if I feel like I've reached a good stopping point. But my trading is kind of pretty much completely geared to me. So I don't think giving it out would help anyone. In a nutshell, what I do is I look at various indicators of overextension and play a mean reversion strategy. So I've found that, in the 3-minute time frame, if I layer on like several overextension indicators, I can there's a high probability that it'll revert to the mean. And I've noticed that I can kind of identify areas where the price will revert from a level 2 and time and sales perspective. So that's why I would look at this video to see what I'm talking about. Because I do have, I think, some entries in here of when I'm trading. I think this is reviewing my live trades. And you can see what I'm talking about when it comes to favorable versus unfavorable price action and all that. So that's in a nutshell what I trade, how I trade. There's videos here. I will do live trading videos, but unfortunately there's never going to be a way that I can I think truly help people trade along with me, because everything has a delay, whether I live stream, whether I like have a chat room, whatever I have. And it's really like, be completely honest with you, sometimes I don't get filled in trades. I don't get the price that I want always. It's like a millisecond of seeing what's on the price action, and making what like price action is showing and making a decision. Because I'm a very short term trader, like within minutes I like to be out. Unfortunately, that form of trading is just not very easy to teach. Well, for the one part, I feel like it's not like impossible to teach. Like, it definitely can be taught, but I don't think that if you were to follow along, and that's why I feel like having trade alerts doesn't make a ton of sense, because I don't think anyone could really replicate what I'm doing here. It's just a specific style of trading that works for me, and that's why I try and gear my kind of community around building your own strategy. So in my Discord, which if you're interested in joining, I would use the link in my bio to join. I put resources on, how some like good videos, good books that that could be useful to people that are interested in getting started. I have a free strategy scorecard, which I think is super, super important to make. This is like an example of what I'm looking at, for example, of like criteria that you could put based on the category. Like, this is basically how, like, baseline my strategy and how I identify what's a good opportunity to short. And you could put a score on. I have a score for kind of, this is all arbitrary, but I feel like some things are stronger factors than others. So like, depending on the news, depending on the fundamentals, depending on the yearly, daily chart, overextension criteria. This is kind of the technicals I use to potentially look at entering the short position. Divergence is always good. That's why I try and wait for price to come higher than previous highs and look at RSI divergence, because that can be very strong reversal criteria. And then price action. So, depending on, whether it's a yes or a no, there's a score assigned to it, and then there's an average score. And then it's like, if above 65%, take the trade. So there's a template here that people should build out depending on their strategy and go from there. And then this, I think, is a very, very valuable trader video. This is a great book. I have some other great books over here. This is the first book I ever read when I traded. This is, I think, the third or fourth, pretty solid. This one's also pretty good. But anyways, this is a good webinar too. The guy himself, I think, is a little shady, but he does a good job of explaining kind of what I would typically look at. So sorry for the long video, but I do think it's really important to get away from the what's your strategy, how do you trade, because it's really not going to be helpful, at least in my instance. How I would recommend going about it is absorb as much information as you can, watch all the trading videos you can, see what's working for other people, try it out, see if it works for you and your style, and figure out make adjustments that fits who you are personality wise. Are you okay with being right 30% of the time but making great RR? Good. Do you want to be right most of the time and make not so great RR? Good. Those strategies are completely different, and it's just a matter of carving out that edge for yourself. Again, being a break-even trader is better than losing money. So risk very, very low amounts until you feel like you have an edge, and then you could start scaling up. keeping in mind that things don't work forever. Like I said, I'm making the adjustment that I'm going to enter on my second entry as my first. So I'm going to wait until that price comes above the high it set. I'm not going to wait anymore for as it approaches, even though if my extension criteria are met specific to pre-market, but you have to notice kind of what's happening and adjust for that. And then it'll pay. I mean, I'm up a good amount net. Like at this point, I think I'm up 10% net. So I'm very much outperforming the market. And I'm risking very little. Like I think I'm risking less than 1% of my account at this point. So on a given trade. So doing good. Let me just pull up the calendar and then we'll call it a day. So green on the month now. I'm very determined I'm gonna have a strong week. So yeah, excited. Keep moving forward and yeah, thanks for watching. Let me know if anyone has questions. Leave a comment. I'll answer it in the next video. Peace.